Hey guys, and welcome back to Smart Money Minds. So this week we had a continuous market sell-off, and what we're looking at here is just a big choppy zone. We are chopping around here. It took another leg down before it bounced quite well on Friday. A lot of people were thinking of buying the dip here and buying the dip here and buying the dip here, and they still got rocked because the stock kept going lower and lower. And that's what happened to a lot of my stock picks this week as well. So we're going to take a look at it, and I'm going to go through the 5 stocks that I'll be watching for this coming week for the push back up. So it was a very nice bounce on Friday that pushed up most of the stocks back up. As you see here on the S&P 500, it took a dip and then came right back up. And the NASDAQ did the same, so tech stocks were rebounding. But it's still an inside bar, and it's quite concerning still because there is still a lot of bear volume that's coming in. The downtrend is confirmed already on the daily, so we have to be cautious that it could continue to dip even lower. We're going to look at the top 5 stocks that we had on watch last week, and because of market freefall, we basically saw the entire stock market, basically every stock gone down with the market. And coming with the next week's, what I'm going to do is I'm going to implement a stop loss level for all my charts, because basically when the market free falls, all the other charts will go down 10, 20, 30%. And what I preach is we need to have good risk to reward. So we need to implement a stop loss for every play that we do. Therefore, what I'm going to do is I'm going to tell you where I would determine my stop to be, and that would be the level that I would have exited out and locked in the loss and reevaluate to see if there is another alternative play that could be made in the future. But this week, following standard procedure, we are looking at a loss of 7%. If you stuck to the 5 stocks that I picked last week, which was Starbucks, FSR, PayPal, MGNX, and MU. The only stock that actually went up was MGNX, while the rest of it tumbled quite a bit, especially FSR. So let's take a quick look. So for Starbucks, actually, if you look at it, it had a green day on Monday, and it pushed up to a new high. However, market weakness dropped it 5 days straight. So this was more of market weakness moving, but it's still held up in this triangle range. The uptrend is still intact, so we are looking for a push up still. And this chart is quite healthy if you're holding it for the long term. On FSR, we had an inside bar on Monday and a doji candle on Tuesday, and 3 days of drop right back down to the 0.786 of the initial move. So we gave back quite a bit, but you have to be aware that the bear volume is not that high considering the bull volume previously. So we can look back up for at least a lower high and maybe an equilibrium to form. So for PayPal, it started to rally, but market dropped it again. Big bear volume coming right back down to the support, and big losses. Now looking at MGNX, we had a couple of bear days, but it bull flagged. Look at the decreasing bear volume and increasing bull volume, and it pushed right back up on Friday. So this was the only green chart that I have for my top 5 last week, up 4%. And lastly, MU was breaking this support trend line. It broke down, hit the 82 range support level right around here, and it bounced back up. So we're looking at still a pretty healthy chart on MU. This week, we have a bunch of stocks that are hitting key support levels with very clear support indicators, and they are all looking for reversals and just looking up. If the market even starts trading sideways and doesn't collapse any further, these stocks are likely to be pushing back up. So let's take a look at some of them. The first one we have is CGC, which is a marijuana stock. Check out this long-term trend line on the weekly. It's coming from the all-time high range, coming right down. Right here, we are hitting that support level right here on that daily time frame. So what I'm expecting is that it's going to hit the support range here, and it is giving us a reversal doji candle. And what I really like is also this zone here. Look at the 29-30 zone that's acting as support, acting as resistance, now possibly acting as support, and hitting the 0.786 zone. So if the market even starts to trade sideways, we're going to anticipate that it could come back up in this range and push up for at least a lower high. And for this, we're even going to set a stop zone, which is the low of day here. If it breaks this low at $28, then we know that this could likely just be a bear flag and then pushing down lower, and that would invalidate our play. The next one I have here is a very beautiful chart. We have Costco, and Costco has been fundamentally solid for many years. But what I love to see is this super support zone acted as resistance, this entire zone acted as support on this bull flag on the daily. Now we're looking at it acting as support as well, this time also with a volume climax candle. So we had 10 days of red. Now I'm at least looking for a bull flag or a bear flag back up to maybe the 326, if not the 338 range before collapsing, if it does. If not, we can see it hit something like this and create a new trend change. For this, I will use the low of day, 307, as our stop level. Next chart I have here is BYD, which is a gaming corp. And what happened, and the reason why I'm choosing this chart, is if you look at the pullback here, it actually came back, tested this range here, so around this range here, back to the previous resistance, now probably acting as support. This uptrend trend line is still holding on, and we're pushing right back up. It's almost like it barely even consolidated. The uptrend continues to be intact. So I'm looking for a continuation move, even if the S&P 500 goes trading sideways. And look at the closer time frame. Look at the 30-minute. It continuously pushed, and the closing volume is high as well. So we can possibly anticipate a gap up, and we'll see where it goes on Monday. And for the last two charts, I'm reusing two of my stocks that I used last week, which was PayPal and MGNX. PayPal, once again, a very clear zone. Look at this, 220 to 225. We're pushing down here. We hit the support range, and now we have a doji candle. So I'm anticipating at least a lower high, likely back up to the 277 zone. My stop out here would be 223, which is the low of day on Friday. And it's just a healthy looking chart because it needed to consolidate. It pushed back up, back to this zone, and we're looking back up. The last chart here, I'm looking MGNX. Why? Low bear volume here on the consolidation with the market, increasing bull volume, and pushed up to a new high on the Friday bounce and closed almost a Maribozu candle, full green candle. What I'm looking for here is this resistance here. It needs to break this resistance here, near 27 to 28 range. If it could pop right over that, then we have confirmed a daily uptrend. Look at this daily uptrend as well. It back tested this upper trend line, and now it's looking to go back up. And I'm seeing that it could very well hit back up to 32 range to a new high. These are the top 5 charts that I'll be looking at this week. The S&P 500, the market itself, it's still very choppy. So we really don't know what direction it's going to take. It could very well sit around this range, trade sideways for a bit before breaking down or breaking out. We don't have that information. So during that time, be patient, don't rush into plays, and have good risk to reward to every play that you're making, and don't blow up your account. So until next week, we'll see you guys. Have a good trading week. Please make sure you subscribe to my channel, like this video, and comment below what you think the market's going to go, and we'll see you guys next time.